All right, so welcome to the deep dive where we kind of take a deep dive into a specific topic and really try to get to the bottom of it. We do this for you guys so that you don't have to spend all the time and effort doing it yourselves.
You've selected a really good one today. It's a topic that's really taken off.
Yeah, today we're diving into Rich Dad, Poor Dad by Robert Kiyosaki.
Really shaking up how a lot of people think about their finances, yeah.
Absolutely. So, for those of you who aren't familiar with the book at its core, it asks this really interesting question. What do the wealthy teach their kids about money that the rest of us just kind of don't get?
What are they missing, right?
Exactly. So you've given me some excerpts from the book,
Right.
and we're going to try to break them down. Basically, our mission is pretty simple here. Understand those key principles that Kiyosaki lays out,
Yeah.
and see if they can offer like a fresh perspective on personal finance for you guys. The book really kicks off with this clash of ideas,
Yeah.
this contrasting mindset between his two fathers.
It's that central tension that drives the whole book.
Yeah, right
Yeah.
away he introduces us to these two totally different viewpoints,
Yeah.
like right in the first few pages. So there's his poor dad, a really educated guy, like a PhD.
A smart guy.
Yeah, and he would say things like, the love of money is the root of all evil.
Yeah, we've all heard that one.
Yeah, it's like ingrained in a lot of us.
Deeply right.
But then he has his rich dad, who is a businessman.
Kind of the opposite background.
And he just flips that idea on its head. He says, the lack of money is the root of all evil. Just total opposite.
Total reversal.
And what's really fascinating to me isn't just the difference in their opinions,
Yeah.
but how Kiyosaki wrestled with those two contrasting ideas.
Right. It wasn't about just blindly accepting one.
He mentions how he spent so much time thinking like, why does my poor dad believe this?
Yeah.
Why does my rich dad believe this other thing?
Right.
And it really wasn't about choosing sides.
Wow.
It was about him actively forging his own financial philosophy.
Forging is a great word for it.
Through that process,
Yeah.
that early exercise in critical thinking, it seems pretty significant
Absolutely.
because it kind of leads us to this bigger theme that runs throughout the book.
Right.
That the way we were raised has a huge impact on our financial beliefs and our habits as adults.
Huge.
And that kind of brings us to Kiyosaki's thoughts on financial education, or really where he thinks we actually learn about money.
Yeah, the book really goes on to say that schools are great at teaching scholastic and professional skills.
Yeah, they're good at teaching you how to be a good employee.
Exactly. They prepare us to work for somebody else.
Right.
But they really just skip over a key life skill.
And that is financial literacy.
Okay, so understanding how money actually works.
In the real world?
Right in the real world, outside of a textbook.
Outside of a classroom.
And this is what's crazy. He talks about how you have all these highly educated people like doctors, lawyers, accountants,
Even politicians.
who, despite all their degrees and expertise, they can still really struggle with managing their own money.
Yeah, their professional success doesn't automatically translate to financial success.
It makes you think you know.
It's not a given right.
We spend years learning algebra,
History.
but so many people leave school without knowing the basics of budgeting, investing, how to manage debt.
And it's not their fault. It's just not taught.
And he even says this lack of understanding can actually affect bigger things, like how national debt is managed. Yeah, because those are the people making the decisions often.
So if schools aren't really providing this foundation of financial literacy, where does Kiyosaki say we should be getting it?
This is where we get into, I think, the most important concept in Rich Dad, Poor Dad.
Yeah. And it's
The difference between assets and liabilities.
okay. So this sounds simple, but he defines these in a very specific way.
Very specific, and it really goes against what a lot of us have been taught.
What most people think. So let's break it down. What's his big rule?
Okay, so his rule is rich people acquire assets. The poor and middle class acquire liabilities that they think are assets.
Okay, so in his world, what actually is an asset?
An asset is anything that puts money in your pocket.
It's a source of income for you.
Consistent income, yeah.
Okay, so not just something you own, but something that's working for you.
Something that's generating cash flow.
Actively.
Yeah, in your favor.
And then on the flip side, what's a liability?
A liability is anything that takes money out of your pocket. It's an expense.
It's a drain on your resources. I can already see how this changes how we view things like a car or a house.
Right. Because those are things we typically think of as assets.
Yeah, like the biggest purchase of most people's lives is a house.
Right.
And he uses cash flow diagrams to really illustrate this point.
Yeah, it's all about the flow of money.
So for an asset, arrow's pointing towards you.
Money's coming in.
And for a liability, it's pointing away.
Money's flowing out.
So simple but effective.
Right.
So give me an example.
Okay, so like a rental property where the rent you collect is more than all the expenses.
That would be an asset
Exactly.
because it's creating positive cash flow.
Positive cash flow.
Okay. And some other things that fit that definition. What about stocks that pay dividends?
Yeah.
Interest you earn on bonds?
Yep.
Royalties from a book or a song you wrote?
Those are all assets. They generate income.
They're putting money in your pocket.
Okay, now what about liabilities?
So obviously things like credit card debt, personal loans.
Yeah, anything you're paying interest on.
But what about that house that everyone says is their biggest investment?
Well, a mortgage, in Kiyosaki's view, is a liability.
It's a liability because
You're making those monthly payments. You have property taxes, insurance, maintenance costs. It's all taking money out of your pocket.
it's a drain on your resources. He says that for a lot of people, their home isn't generating income.
Right. It's just costing them money.
It's a big expense. And that's a huge shift in how we're taught to think about home ownership.
It's a challenge to that conventional wisdom for sure.
Big time. And the book does a really good job of contrasting the cash flow patterns of different income groups.
Yeah, he talks about the poor and middle class and how their expenses often just match or even exceed their income.
Yeah, so they're stuck in this loop.
And their liabilities tend to pile up over time.
So even if they're making more money, they're not gaining any real financial freedom.
Nope.
Because they're just spending it to cover those liabilities.
They're not building up those streams of income
Right.
from assets,
And that leads us to the concept of the rat race.
which he talks about a lot.
It's not just about working hard, is it?
No, it's about working hard, but not getting anywhere financially.
So describe the rat race. What's it all about?
Okay, so as people's income goes up, their spending also tends to go up.
Lifestyle inflation.
Exactly.
Right. So bigger house,
Fancier car,
more vacations.
maybe more debt.
So even though they're making more drac, they're not really any better off.
They're trapped
Yeah.
on that treadmill.
And so, according to Kiyosaki, how do we break free from this rat race?
Well, this is where he brings in this concept of minding your own business.
And that doesn't necessarily mean quitting your job and starting a company, right?
Not right away.
Okay, so what does he mean by minding your own business?
It means focusing on building up your asset column.
So directing your time and energy toward things that put money in your pocket
Exactly.
consistently. So your business isn't your 9 to 5.
Right.
It's your portfolio of assets.
Exactly.
And the goal is to grow those assets until they can cover all your expenses.
And then you're free from needing that paycheck.
You're financially free. And he talks about actively seeking out those real assets while keeping your expenses low.
And reducing your liabilities, yeah.
And he lists out what he considers real assets, businesses that can run without you.
Yeah, so you're not trading your time for money.
Stocks, bonds, mutual funds, income-producing real estate, and then things like royalties.
Name a book or a song you wrote.
Things that generate income whether you're working or not.
Passive income.
Okay, so this kind of naturally leads to another one of his big ideas.
A big one.
And it's that the rich don't work for money.
It seems kind of counterintuitive,
A little bit.
but it's a really big shift in mindset.
So explain it.
Okay, so it's about having your money work for you
Uh-huh.
instead of you working for money.
Like that 10 cents an hour lesson he got as a kid.
Exactly. It wasn't about the amount. It was about the principle.
It was about learning how to make money work for you instead of just trading your hours for a paycheck.
Right.
And he says that a big thing that holds people back from this is fear.
Fear of what?
Fear of not having enough.
Fear of losing their job,
Of being insecure.
stepping into the unknown.
And that fear keeps people stuck.
Keeps them in that job mentality.
Yeah, and he talks about the impact of taxes, too.
How they really affect people who mainly earn a salary.
So explain that a little.
Okay, so he points out that when you're an employee, you get taxed before you even see your money.
Right out of your paycheck.
And then that same money is taxed again when you spend it,
You get taxed when you earn, when you spend,
and possibly when you save.
and even when you die.
So you're getting hit from all sides.
That's like death and taxes, right?
Yeah.
And this really diminishes the value of your earned income over time.
It's not just about how much you make
It's about how much you keep.
and how much you can grow that after-tax money,
And this brings us to the idea of financial intelligence.
which is more than just knowing the difference between an asset and a liability.
More than just basic definitions.
Yeah.
So how does he define financial aptitude?
It's what you do with your money once you make it,
How you manage it
how you protect it
and how you grow it.
over time.
Okay. And he breaks down financial intelligence into 4 essential skills.
4 key skills.
So what are those?
All right, so first you need financial literacy,
So that's the ability to understand financial statements.
knowing what the numbers are telling you.
Okay.
Second,
Investing.
which is
The art of making your money multiply.
making your money work for you.
Exactly.
Okay.
Third, understanding markets.
So how supply and demand works
How markets operate.
and how to find opportunities.
Right.
And lastly,
The law,
so a basic understanding of accounting principles,
corporate regulations.
state and federal laws that can impact your finances.
Knowing the rules of the game.
So it's a pretty comprehensive understanding of the financial world. Yeah, you have to be well-rounded.
And he even has this interesting way of defining wealth.
It goes beyond your net worth.
Yeah, how does he describe it?
Okay, so he defines wealth as the number of days you could survive without working.
Survive financially.
Yeah, based on the cash flow from your assets compared to your expenses.
So how long your money could support you if you stopped working today.
Exactly.
And that's a much more practical way to measure your financial independence
It's about how long you can last on your own.
than just looking at your assets minus your liabilities.
It's a different perspective.
Okay, so building this financial intelligence is crucial. And he goes into an area that some people might find a bit controversial.
Yeah, it's definitely a sensitive topic.
And that is corporations.
Specifically, how the wealthy use them to minimize taxes legally
Legally being the key word.
within the law. Yeah.
So first, can you explain what a corporation actually is?
A corporation is basically a legal entity that's separate from the individual who owns it.
It's its own thing.
It has its own rights and responsibilities.
Okay, so how does this help with taxes?
Well, corporate income tax rates can be lower than individual rates.
So you're already paying less in taxes
And you can also deduct certain business expenses,
using pre-tax dollars.
which further lowers your taxable income.
So he's saying that this is a tool that the wealthy understand and use to their advantage.
Yeah, as part of that financial intelligence.
And he even suggests that this tax the rich mentality could actually backfire,
And hurt the middle class,
who might not understand these strategies.
or have access to them.
It's definitely a perspective that makes you think.
It does.
Now, shifting gears a little bit, Kiyosaki talks a lot about the importance of constantly learning and recognizing opportunities.
Especially when you're young and starting out.
Yeah, he says, don't just look for a job that pays well.
Look for a job that will teach you valuable skills.
Like what?
Things like sales and marketing.
Skills that can translate to other areas of your life. He even says he had to learn sales to become a best-selling author.
Even though he considered himself a terrible writer.
Which is interesting because those skills are valuable in any field.
Absolutely.
And he makes the point that the best opportunities aren't always obvious.
They're not always right in front of you.
You have to be able to see them with your mind.
With your financial
To
intelligence.
recognize them.
And seize them.
It's almost like you need to develop a different way of looking at the world.
With a different filter.
To see those opportunities that others miss.
Absolutely.
And he even talks about creating your own luck.
By being financially intelligent,
Right. So the more you learn,
the more you see.
the more opportunities you'll find. Now, actually building this financial intelligence and escaping that rat race, it's not always easy.
It's not a walk in the park.
And Kiyosaki addresses this. He talks about all these obstacles that people face.
Internal and external.
Yeah. So what are some of the big ones?
Fear is a huge one.
Fear of failure.
Fear of losing money.
Fear of the unknown.
And that can really paralyze people.
It can stop them from taking action. He also talks about overcoming cynicism.
That tendency to dismiss new ideas without really considering them.
Like when he talks about real estate, people say, I don't want to fix toilets.
Yeah, they get hung up on the little things.
And they miss the big picture.
They miss the potential.
So he says, you got to focus on your goals.
Not the minor inconveniences.
Minor inconveniences.
Like financial freedom.
Right.
And then he introduces this idea that's a little unconventional.
It is.
And it's, I pay myself first.
What does that even mean?
So putting money into your savings or investments?
Even before paying your bills.
Yeah.
It sounds backwards.
It does. But his logic is that it forces you to be more resourceful.
You have to find ways to make more money.
To cover those other expenses.
There's that gap.
It's like creating this positive pressure.
To force yourself to grow financially.
And he also talks about overcoming laziness.
Being busy versus being productive.
Doing things that actually move you toward your goals.
Right. Building up your asset column.
Not just spinning your wheels.
And then there's arrogance.
Thinking you know it all.
Closing yourself off to new information.
It's a different perspective.
And he really emphasizes that, recognizing what you don't know.
And being open to learning.
is crucial for financial growth.
Arrogance can be really costly.
It can lead to mistakes. Okay, so it's not just about the technical knowledge.
Right.
It's also about the right mindset,
In taking action.
consistently taking action. So what are some practical first steps someone can take if they're inspired to change their financial life?
Start small.
Small, manageable steps.
Like buying a book on personal finance.
Going to a seminar.
Tracking your income and expenses.
Just getting a clear picture of your current situation.
Exactly.
He also really recommends finding a mentor.
Someone who's already achieved what you want to achieve.
Yeah, learning from someone who's been there and done that.
They can offer guidance and help you avoid mistakes.
And he also talks about being proactive, making offers.
Even if you get rejected, keep trying.
Keep putting yourself out there. And there's this idea he emphasizes that I think a lot of people overlook.
What's that?
That profits are made in the buying, not the selling.
You make your money when you buy something.
Not when you sell it.
Right.
So being able to find those undervalued assets,
And negotiate a good deal.
that's key.
It's crucial.
And he tells this great story about a friend of his who used college fund money
To buy a house.
and then turned it into a mini storage unit business.
That's creative thinking.
Yeah, using that initial investment to create something bigger. Now this brings us to something else he created, the cash flow game.
Yeah. What's the point of this game?
So it's a hands-on way to learn about money and investing.
A fun way to learn.
Yeah, and it really focuses on the relationship between your income statement and balance sheet.
Those core financial documents we were talking about.
Right, so it gives you immediate feedback.
In a safe environment.
So you can try different strategies
And see what works.
without risking real money.
Smart.
And he also mentions there's a more advanced version of the game called Cash Flow 202,
For more serious investors.
which goes into more complex techniques.
So you can keep learning and growing.
Yeah, it seems like a really cool way to build that financial intelligence. Finally, in the preface of the book excerpts, there's this little part about finding your path.
How does that tie into all this?
It brings in this idea that fulfillment isn't just about money.
Right.
It's about finding your purpose.
What you were put on earth to do.
He says that the path is the goal. It's a quote from Thich Nhat Hanh.
Powerful quote.
And he contrasts that with the traditional go to school, get a job mentality.
Which is what most of us are taught.
Right. And he talks about the 4 areas of personal development, the spiritual,
Emotional.
mental, and physical.
All 4 are important.
And finding your path involves growth in all those areas.
Not just your career or your bank account.
So even though Rich Dad, Poor Dad is about money,
Yeah.
it seems to suggest this bigger idea.
That financial success is a tool.
A tool to support a more fulfilling life.
Exactly.
So to wrap up this deep dive, let's summarize the main points.
Okay.
What did we learn from these excerpts?
So the core message is about the importance of financial education.
Something that we often don't get in school.
Right.
You have to seek it out yourself.
And you have to understand the difference between assets and liabilities.
Things that put money in your pocket versus things that take money out.
And the book says you should focus on acquiring assets.
Make your money work for you.
Don't just work for money.
Escape the rat race.
Exactly.
And develop your financial intelligence.
Those 4 key skills we talked about.
So this deep dive was designed to give you a good understanding of these principles.
From the material you provided.
And hopefully get you thinking about how they apply to your own life.
Now I want to leave you with this question.
Okay.
How would shifting your focus from just earning income to actively building assets change your financial future?
Really think about that.
How would it change your long-term financial well-being? It's about examining your current habits and your mindset.
Based on the ideas we discussed today.
Rich Dad, Poor Dad provides a really powerful framework.
A framework for thinking differently about money.
So if any of this resonated with you,
Or sparked your interest.
we encourage you to go deeper.
Maybe read the full book.
Do some more research on your own.
Explore these concepts further.
And take control of your financial future.
Thanks for joining us for this deep dive.
It's been a pleasure.
Until next time.
Take care.